this year. What's your view on the markets?
Oh, right. I get asked this a lot. Well, we're in uncharted territory compared to the past, I say, because obviously, um, Bitcoin was birthed in a very long bull market in equities, and there was a lot of liquidity in the market. And right now, a lot of things have changed. So, well, what is probably the dominant part of it is that, like, as in this talk, the institutions have been coming in, the traders are coming in, and the correlations to the major indices are very, very tight. Actually, it's like mid 95% correlated, and so really Bitcoin now is being pushed and pulled by traditional finance, and you can actually see it through the fundamentals from on-chain as coins go in and out, from the funding rate of calendar futures where traditional finance likes to trade. And so right now we've had this very long protracted bear market, and I would say a lot of it, whether this is the bottom, I think that's the question, is this a bottom or not? It's a really tough one to call. Like, if we do get another pullback in equities, I think that it'll be really difficult for Bitcoin to defend this bottom. But if we look at all the models around Bitcoin, which, when I say Bitcoin, I mean Bitcoin and all the other crypto asset classes. If we fall through this zone, we could go down to as low as $10,000, is what the models are saying. 10 to 15,000, right? But having said that, like, everything's so oversold everywhere, including traditional finance. Like, we're in a the last time we had such a long bearish trend in equities was at the bottom of the 2008 world financial crisis, and we're actually in a window of reversal right now. So I'd like to think that that if that holds true and equities reverse, then I'm very, very certain that we've reached a bottom, because all the on-chain indicators and those longer-term models are saying that this is the bottom.
Yeah, that was actually leading to my next question. So you are the godfather of on-chain analysis, and so what are the most interesting things you're seeing currently on-chain? Is there anything specifically to point out? Or?
I could say, well, who knows what on-chain analysis is here? Okay, okay. So what we're doing when we're looking at on-chain analysis is we're looking at inside the ledger of blockchains, particularly Bitcoin, and we can gauge all sorts of structure around the market, including demand, supply from different participants. Like short-term speculators versus long-term, what are they all doing? And so, yeah, like different views onto the network. Right now, it's in a very on-chain. It's like, this is the point, is that on-chain is very much about fundamentals. And so you don't really buy Bitcoin as a speculator and move it on-chain. You buy Bitcoin and move it to your cold storage wallet, which is an on-chain transaction, because you're a long-term investor. And so that is happening right now, right? We're getting immense amounts of accumulation going into wallets. And lately there's been huge amounts of buying, and I don't know who it is, right? I don't know who are these people that are buying and scooping up lots of Bitcoins and putting in cold storage. I kind of wonder whether or not we're going to have a whole bunch of nation states saying we're going to adopt Bitcoin. Yeah. There's some amount of buying. And then having said that, we're in an era where the on-chain side of things, you can see demand and supply on the blockchain, but that doesn't determine the price. It's only one of the components. There's the derivative markets, you know, like the likes of the ETFs that's come out, but a lot of speculators coming in, buying and selling. So that's another input. And so you really have to measure all of them against each other. There's also a latent amount of speculators that are just trading spot, but they're not moving on chain. And so you get these sort of different signals that are coming in, and they wax and wane. And right now, it's not very dominant, these on chain. It's much more dominant on what Wall Street's doing. Effectively the hedge funds that are trading Bitcoin. And
yeah, so right now, your view is that on-chain metrics, market structures lost a little bit signaling power given all the focus on macro correlations, Federal Reserve, interest rates. Is that fair to say?
yeah, if you're speculative, I think it's okay if you're looking at a longer-term horizon, maybe 6 months onwards. But in terms of like what's happening over the next 2 weeks, which used to be very accurate, is not very accurate now. It's moving up and down with equities, and that's coming through the calendar futures. So yeah, it's just being traded by these hedge funds as risk on, risk off.
Okay, continuing with markets. For the last years, it has always been assumed that inflationary environments would cause Bitcoin to thrive, right? Now we are in a world where we have hyperinflation in many parts of the world. In Latin America, we see inflation getting out of hands in the US. And at the same time, Bitcoin, at least price-wise and demand-wise, and the whole excitement around it seems to disappoint. Why do you think Bitcoin is struggling despite these macroeconomic backdrops?
Yeah, well, that's a good question, which was really alluded on the last comment, which is we're now in this super tight correlation with Wall Street. And so really Bitcoin's just moving up and down with risk on, risk off. And if you're like a Wall Street trader, you're gonna buy risk by buying into, say, tech stocks, NASDAQ index. Well, Bitcoin is way more volatile, so you're going to get a lot more effective leverage by buying Bitcoin or Ethereum, and then you can leverage on top. There's a 10x cap on our exchanges, right, where the standard in TradeFi is 3x. So now you've got like this risk on, and when the NASDAQ moves, crypto moves way higher, and then you've got a 10x leverage on top if you want to utilize it. So it's actually a very, very good risk on, risk off trade. And now, that's a huge volume. And so now we got what we asked for, right? Which was the institutions are coming, and now we're just like up and down, up and down, up and down with risk on, risk off.
Mm-hmm. And so these correlations that are undoubtedly the case right now, do you think they will break at some point? And if so, what would be the catalyst?
Well, I hope it'll break, and I think it will, and it really is one of the outcomes of this adoption curve. Like, does it trade risk on, risk off when like 1 billion people adopt it? Let's say 10 billion people adopt it, right? We're at what, 8.5 billion people right now, but it's coming really quick. And so I think some of the most important things within this industry is user-based adoption of Bitcoin, not necessarily any one crypto project. It's actually how much of the world is buying into this asset class, how many nation states are using Bitcoin as a currency, because that's the only way this asset class gets big enough that it breaks free from this risk on, risk off correlation.
And do you see this bear market currently, do you see any similarities to the previous bear market, or is it anything different? How would you compare that? Did the world change? Well, the world did change, but
I mean,
the bear markets.
This one was initiated by the futures market, because we never had well-developed futures market in the last bear market. So, here I was looking on chain, thinking I'm going to be able to find the top, and that worked in last time, right, on chain. This time it didn't. Nothing happened on chain. The sell-off came from derivatives, because it turns out if you had Bitcoin and you shorted it at the very top of the market, you could go to cash and earn 15% interest annually. You effectively enter a cash and carry trade by selling the futures while holding your crypto. So it was all in the derivatives that told you the top. So that was one of the most marked difference of this bear market. And of course we had this DeFi development, and so we saw somewhat akin to the 2008 world financial crisis, where institutions started to unwind, and the deleveraging happened in a cascade from, say, Luna's sell-off of Bitcoin into 3AC, and then you got like SBF and his FTX and Alameda bailing out or buying big stakes of companies. And so now there's conjecture whether or not we're going to get another capitulation from miners selling off.
All right.
So,
okay, fair. So this is the last question from my side before we open to the audience. I noted, Willy, that you wear a very beautiful T-shirt today. Crest Fund. So you have been pioneering the on-chain analysis discipline, and now more recently have gotten into running a hedge fund of quantitative trading funds. What was the appeal for you, and what got you into this?
Yeah, there's a number of touch points, right? So when you trade quantitatively, you can take long, short positions. While the bear market's happening, you can still gain, right? And you can harness the kind of inefficiency that's coming into these markets from new token projects coming in. You can do market neutral trading and get a yield. So overall, you can build this portfolio of this thing that just goes up smoothly. And so, well, you and I talked about this, right? It's like, you called it the freedom fund, where you just park money into a whole bunch of computer algorithms that are constantly working to extract inefficiencies and trend and volatility, extract that out of the market. So that's the premise of it. And yeah, there's a lot of things you can do further with it, but that's the main thing.
Cool, thank you so much for this. Let's open to the audience. Do you have any questions? Feel free to ask. There's one over there. Please.
Yeah. On-chain analysis, what do you see coming from the miners? Like, are they already capitulating their balance sheets on the market, or what's the state of the mining industry?
Yeah, well, if we go traditionally, we'd measure the hash rate, and they capitulated quite a while ago, and the hash rate's going through the roof. But these are traditional metrics, and even though we're seeing one of the largest publicly traded miners about to go bust, we're not picking that up on chain, right? What we're seeing is hash rate go through the roof because it's a weird one. I was talking to a miner just a few days ago. He's mining out of Kazakhstan, and hash rate's going through the roof. Energy prices are the highest we've seen in a long, long time. Why is hash rate going through the roof while Bitcoin's not going up in value? And so there was some amount of talk around, well, Russia's activating the miners. They're saying Bitcoin's okay, and they want the mining. So it was, it's a different answer, but what we're seeing is that it's become geopolitical of controlling hash rate to punch through trade sanctions. So yeah, it's completely different from the past cycles that we've seen.
Yeah, over there.
So Crest is a fund of funds. Which types of funds are you looking at or investing into?
Well, we have two general classes. One's directional and one's market neutral. But of course, there's a lot of breakdowns within it, and we run a blend of those. Is that a relatively simple answer? But yeah, so yeah, we look at pretty much any fund that trades quantitatively, and then we measure how apt for our portfolio it is, because we look at each quantitative trading strategy as like a Lego brick, right, with its own particular personality of performance. And what we like to do is snap them all together to provide and customize the kind of risk-return ratio and performance we we want to dial it into. So that's a great thing of trading quantitatively, is that you know, if you're used to crypto, you're like, I want to buy Doge or Litecoin. Each coin has its own time in the sun, and this thing is like, we can actually pick the strategies and actually create the kind of risk reward that we feel comfortable with.
Yeah.
In your presentation, you mentioned compressing yields. Is that something that's like asymmetrically trending to zero, or is it more a seasonal thing?
It's both, right? And so, like, what we're seeing is a lot more like participants competing for the inefficiency, and then of course in bear markets, the yield compresses because it hits the cash and carry trade where you're shorting. Yeah, don't worry about it. But I won't get into the weeds. But yeah, the yields compress in a bear market, and the yields compress in a sideways when there's low volatility. Effectively, a lot of the yields come from people taking positions, particularly retail. And in a bull market, those yields are crazy good, and in bear markets, no one wants to trade. So those are the two impacts.
Yep, over there.
Question is, on-chain analytics relies on public data, right? It's accessible to everyone. How much time do you give this very niche approach of trying to get information interpreted? How much time do you give it? It's still giving you an edge, and do you think at some point it won't be an edge anymore?
Are you saying how long will this this signal degrade before it degrades? How long will it last before it degrades? It's constantly changing. Like, it was very, very strong in 2017, right? I know one firm, they traded on-chain signals from 20,000 to multiple 9 figures using on-chain as a big component. And so but they started in 2017. And they were saying, man, just measuring the flows of coins in and out of exchanges was the bee's knees. And so, and I do think that it can become an input into these quantitative strategies where they look at the price signal but derivative signals. In our industry, we've had this very special on-chain signal, which in equities you don't get, right? You get analysts going into companies, analysing their books and their products. We can do this quantitatively through the blockchain.
I was curious to know your opinion on Bitcoin's declining security budget over time, like over long term.
Yeah, that's a very sophisticated question, because there's been a paper written saying that we don't know what will happen once the block reward goes to zero. I mean, I haven't put much thought into it, in that it really is a number of decades away. There's thought that we need very high fees to make that work, and at least the modelling I did back in 2017 showed that we're going to get those high fees. Since then, like, the network's become way more efficient, right? There's a lot of efficiencies that have been built in with SegWit, now the latest Taproot upgrades. And then also there was like fiber network, which reduced the latency across the nodes. So all these efficiencies added up, and you look at the fees and they've gone to really cheap. But we've got a few decades to go. I thought that back in 2017, another 2 halvenings would do it and would be sufficient, like 8 years. Now with the new efficiencies, we get cheaper fees, but the question is, will it be expensive enough? It's a long, how many years is it? It's like maybe 50 to 100 years we're talking before we get to there. And we'll probably have other things to tackle, like maybe quantum computing. So I'm not sure of the answer. Maybe, there's a lot of unknowns. I think there's a lot of unknowns, and it's market driven as well. So,
you've mentioned that politics and regulatory authorities are looking more and more at cryptocurrencies and market transmission. Well, on the one hand, regulation is decreasing freedom course. But on the other hand, it could help to foster adoption by classic businesses. So, what do you think? What area has a good approach to regulatory things, and why? Like US, Europe, Asia.
I think, my opinion is that it's very hard to tell whether regulation is going to work great or turn out really bad. And so my approach or thinking around this is what's really good is actually what's happening now is that lots of different jurisdictions are trying different approaches. And we can see what falls out in best practices over a number of years. So it's kind of like it's like tech world. Build a whole lot of beta products and let them compete and see what actually works. So I don't think anyone really understands how to regulate this stuff in a way that is really good. We might have ideas, but we don't know. So
perfect. Well, Willy, you flew here from Lisbon this morning and flying back tomorrow. So that was quite an effort, and thank you for coming here. Let's give Willy a big hand. And